All right, guys. So I'm going to do something a little bit different today. I posted the questions in the Patreon, and the first question we had was from Gucci. I'll read you his comment, and then I'm going to kind of go in depth about those questions. I'm not going to be doing any charting today, but I'm going to explain more of the psychology of a market cycle. But some stuff that's really important, um, some stuff that's really helped me be more comfortable with losses or how to invest in this market and hold and basically not listen to the herd. And I'll kind of go into depth. It's going to get kind of deep. Just bear with me. You're going to find quite a bit of value in a lot of this stuff and stuff that you can probably take the rest of your life. But here's his comment. So I asked, what do you guys need help with when it comes to trading or mindset or anything like that? And he said, my experience with the losses, what you've learned from them, how they change the way that you think, and how you become to be a long term holder, and how to achieve that mindset. He said, "Thanks, Michael. I find it very interesting the way you think and appreciate the classes in the chat room very much." I appreciate that, Gucci. Um, so I'll start with that first question here. How do I deal with losses? So, some things that I've lost on, I've made some bad mistakes in cryptocurrency. But first, I want to say that I'm a swing trader and I buy and hold through cycles. So what I did is I bought the bottom of the cycle and I'm continuing to buy. If I was a multimillionaire, whenever I started getting the crypto, probably would be set for life right now, but I wasn't. I had some money and I had to work for the money that I was investing, and I bought a lot of really cheap cryptocurrencies because I figured that uh, digital currencies were going to change the way that society works. Um, Adoption just kind of happens through bubbles. So as the more things are dripped on people, the more that things are adopted. So I'll kind of get to that in just a second. Like, it doesn't really matter what you believe now. It's how much you consume the information, then you start to believe it. And I'll get to that. But some crypto that um, I've lost like wallets that I sent that I just maybe forgot the password to, or I forgot the 12 seed phrase. I think I had like a MetaMask at one point that had Dent and Pillar in it, and I cannot find that wallet. I don't know where my seed phrase is or anything like that. So basically, I've accepted that that's just part of the game. So if you're not going to be due diligent enough, make sure you're not putting money that you'd be able to lose in a wallet without having several different backups. I did write some of this stuff down, so I'll probably read it to myself and then kind of go over it just so I can kind of think about it a little bit more. At this moment, at this moment in time in crypto, um, you really only lose when you sell. So we're in the middle of a cycle. I don't think this is over. We're just now gaining a bunch of adoption, a bunch of institutional buyers. Not that that means it's going to push the price up, but the adoption is kind of in the early stages of adoption. So I think that these bubbles will continue for a couple more cycles. You also lose money whenever you leverage something or you short something. So if you just buy, like if you just buy Litecoin or Bitcoin and just hold it, that Litecoin and Bitcoin didn't really go away. But if you leverage something, you're basically taking out a loan in order to have debt, just money that doesn't really exist. Um, and they can take away the money, the hard-earned money that you've gained. by liquidating a position or dropping the price or increasing the price depending on if you short. So basically, I just hold. I don't short and I don't leverage. Yeah, I probably could have made a lot of money on certain trades that I did there, but eventually people get more greedy and they put more on a trade, and eventually they blow up their accounts. It's really high risk. I'm sure there's people out there that can do it and they're really good at it. I think I'm going to make enough money just holding specific cryptocurrencies over time and not really too worried about all that. So what did I learn from them? So this kind of gets into the psychology of the mindset, and I'll get to the mindset later on in the video. But you learn a lot from failures, from not doing your due diligence. Trading crypto is one of the best things to do to increase your capability to become a better person. So what I mean by that is you get to really look inside yourself. So if you make a bad trade, you can look prior and say, well, why did I make that bad trade? Was I greedy? Was I selfish? What really was going on inside my mind before I made that trade? And you start to realize how you shouldn't be doing those things in the very beginning. And later you eventually learn and figure it out that you shouldn't be very greedy. That's how these market cycles work. That's why the rich get richer and the poor stay poor, because they just don't understand that wealthy people are selling when everybody else is greedy, and they're buying whenever everybody else is fearful. And that's what I kind of teach you guys in the class. And that's why I use the fear and greed index to kind of show you how it kind of works. Fear and greed index hasn't been around a very long time, but it's really the best tool I've found so far. The more data we have, the more years it goes on, the more data we'll have, and the better we'll be able to predict, um, market tops and bottoms through the fear and greed index. So it'll force you to look inside, unless you blame other people. So if you blame Elon Musk, okay, so let's say, well, it's his fault that the market fell. If you look at the market, I mean, the Bitcoin was up like 1,500% before he made that tweet. And if you bought after it's been up 1,500%, it's not Elon Musk's fault. You bought a very increased price of Bitcoin. So to say that, I try to avoid blaming other people for really anything that goes on in my life, because I can learn if I don't blame other people and I look what I did instead. So that's kind of a mindset thing that I look at. Blaming other people just kind of reflects the discipline and the education you get from accepting fault for yourself, and then you just keep going from there. So that's what I do, and that's what I've learned. Yeah, it typically just comes down to greed. And you can also think of this. So, like, I would say, like 95% of the things that happen in our lives is the result of some action we took before. So, um, if a failed trade happened, you can look before. Was I greedy? Did I put too much money in there? Did I follow the trade without having proper education on the project or indicators, or did I just put more money? I was more money than I could afford to lose in there. And for example, whenever I lost that wallet password, it was because I went too fast. Um, I went too fast. So I lost some Litecoin. I sent Litecoin to a MetaMask wallet maybe like 3 years ago or so. And it wasn't much Litecoin, but it was it would have been worth like a couple $100 now. It wasn't much, but I just went too fast. So I looked, I didn't blame MetaMask, or I didn't blame, um, the Ethereum wallet for not having bridges yet. I didn't blame anything. I just said, okay, so next time I'm going to be very, very careful, um, what I do in this market. So crypto just is really, really good at just humbling you and then making you realize you need to double check your work. And I also didn't research enough. So I didn't find out that Litecoin can't be sent to an Ethereum address until after I lost that Litecoin. I don't think I can ever get that back, which is fine. So I was learning. That was a $200 learning learning experience. So I think of lost money as a learning experience. So um, this picture I have on there is IQ and then EQ. So you can think of like really smart people being the top of the glacier, and then EQ, emotional intelligence, is the bottom of the glacier. So most people think smart people have it figured out, people that think they're smart, but emotional intelligence is, in my opinion, quite a bit more important. And all basically everything that I'm saying right now is going to explain that. And all of this relates to crypto too. It relates to being successful in any way. So just hear me out. So when you're really aware of your emotions, so like if you feel pain in your life in some way, try to figure out where that pain's coming from. Um, so like if you lost a trade, you feel pain, then you look before, what did I do wrong? Instead of blaming somebody else. Because you deflect that pain. So you deflect it from yourself. So you never look and figure out what you did, and you continue to make the same mistake over and over and over again. Humans are insane. There's a quote out there that insanity is doing the same thing over and over again. And that right there is part of the reason why people do that, because they just can't look. They cannot blame themselves. So this is what I did whenever I was really new, and you guys might have done this too. Probably did do this. Most people actually do. So following a YouTuber into a trade, or some person, um, some person in some kind of trade. I went into, I think, Veritasium, uh, Dent, Theta, um, Pillar, PayPy. So that's five. I think I probably did maybe 10 or something like that. Um, yeah, there were some other ones, and I can't really remember their names, but um, let's say, out of 10, I had one good trade. So I lost my dent in that MetaMask wallet. The other ones, the SEC went after Veritasium. I still have those, but I don't think they're going to be worth anything or much. And Theta, Veritasium and Theta are the two that I did some research on. Theta is the one I did a huge amount of research on, and Theta is doing really well. So the other ones I didn't really do any research on, and not much at all. I just followed the trade. Theta was something I just kept investing in, and Veritasium was too, but it was less than Theta, and Theta's done really well. So it's not always bad to follow a YouTuber. Like, you can get some value from YouTubers, but just do some kind of due diligence and research. Even the trades that I'm putting out there, do some research on them before you put your money in there. Just do your own research on projects before you put money in there. And a lot of people probably blame that YouTuber um, for making those calls or doing those things, but I was the one that followed that YouTuber in there without doing research. So that's how I can blame myself in that situation. So if I ever follow a YouTuber in a trade, it's going to be with risk capital, very small amount of capital, or something I am willing to never see again. And yeah, just basically money I'm never going to see again unless I do a lot more research on the project. This is another important one too. Invest in things that you believe in or have faith in. If you don't put risk capital in there, uh, if you if you don't put risk capital in there, it's something that you're never going to see again. So if you don't believe in the project, you don't know anything about the project, put risk capital in there. If you believe in the project, you understand the project, that's whenever you can start putting more money in there and investing in the project. Another thing that I do is I allow myself to be wrong. So people that want to be right all the time and they think they're the smartest person in the room, they'll force trades. So if they think if I called the bottom here on Bitcoin, I said Bitcoin's bottom is at $3,500 or 38, wherever it's at right now. And if I called the bottom and I said, yep, that's the bottom, and then I just continue to put all this money in there, um, and I'm sure it's the bottom, and we go lower, then that's, I'm okay with being wrong. Like I have some money on the side to be wrong and then buy a little bit lower. And then everything that I've found in life that's successful is with consistency, congruency, and dedication. This goes for any crypto project. So a company needs to have a vision and then hit targets. So they have some kind of vision, they have a good leader, of course, and they need to hit targets. So they make commitments and they follow through with those commitments. So anything that you're investing in, make sure that they have some kind of targets that they're hitting, and then that vision, because followers will follow that vision. They need to have a leader that has a vision, a clear vision, and then those followers, the workers, the employees, will follow that vision. Or the people that run nodes, or however it works in cryptocurrencies. And then human behavior as a collective is consistent. So it's consistent and congruent. And that's why um, people will always be greedy and fearful. And that's why Elliott Wave and Fibonacci still works today. It worked, whenever it was released, and then it works today, which is actually kind of cool. If you do a little research, um, Elliott Wave and the Fibonacci, those were two completely separate people that made both of those, and they didn't know about each other. So Elliott Wave was created, and then um, he put Elliott Wave on top of Fibonacci and started to realize, oh crap, these are the same things. So Elliott Wave and Fibonacci run together, but it wasn't meant to do that. So if you want to do some research on that, it's actually really cool. Okay, so mindset. I kind of went a little bit into mindset here, or in all the things I just talked about. Um, but this is kind of the way that I see things. So I realize I acknowledge I'm human, and then I'm not any different than anybody else. I have the same emotions. The thing I try to do that's counterintuitive, whenever I'm excited in the market, I start to get fearful. Okay, so when I'm really excited about the market, it makes me cautious to be like, hey, might be in euphoria. I might be in thrill. This is the time to start to worry. Um, I literally have to tell myself that because at that point in time, when that happens, we're all going to think cryptos are even going to go higher, just like Ethereum. So I was looking at the chart on Ethereum and it looked like it was going to go higher based on indicators. But I remember I put like a 3 day, I said, okay, Ethereum's starting to show some kind of signs of weakness in the charts. And then I thought that it was going to run for another day, hit our target, our upper box, and then drop. Um, it hit the first box and dropped right from there. So that's something I'm still working on, of course, and then um, hopefully on the next leg up, we can um, get out with some profits. I wasn't too concerned, so I wasn't going to sell whenever it was dropping down, um, just because I feel like there's another leg up due to Elliott wave. So I always try to take a counterintuitive approach whenever that happens. Okay, so this is something I've learned quite a bit in books that I've read. Rich Dad Poor Dad was a really good book to start reading to kind of understand how the 1% think. He talks a lot about like going to school, so like brainwashing and a collective way of thinking. So like basically everybody, the masses of the people are brainwashed and they have a collective way of thinking. So their way of thinking is, go to school, get a degree, buy a house, get in debt. Um, I can go on and on, but those things are ways to keep you actually pretty broke because if you go to school, you get a degree, and you actually have debt. You have an interest to pay on that debt. Even if you were to invest in a 401k making 7% per year, that 7% is discounted because of your student loan debt. And then you have a house payment where you have 3% per year, and you're actually losing money paying off that debt just on the interest. Um, so basically, trying to do something different. So, like, that's a linear way of thinking. And then, if you want to be successful, you have to break away from that way of thinking. And when you break away from that way of thinking, a lot of people will really dislike you. So, I'll explain kind of a quote at the very end of this that really helps you kind of understand that. So anything that goes against that way of thinking gets rejected in your mind at first. So something that's completely out of the ordinary, most people will just reject. But then if you start to do some research in some of it, you start to realize, oh crap, this might actually be true. So um, try to be aware of what you reject and why you're rejecting it as well. A lot of people, for example, rejected Bitcoin and cryptocurrencies, and look what's happening. So it's just because it's so counterintuitive, it's so different, so volatile. It's completely different than what we're used to. We're used to 7% per year in a 401k, or um, the value of gold slowly going up. Like, we're not used to these 1,500% gains within a short amount of time. So a lot of people think crypto is a scam just because the value increases over time. But crypto kind of is like a glitch in the system in a way. Like, people have been pressured into, like, they don't get raises very much to keep up with inflation, and insurance companies keep raising their prices, and school debt keeps going up. The cost of school keeps going up. The cost of everything is going up when salaries aren't increasing, and that's been happening for a very long time. And banks, same thing with banks. They do like fractional reserve banking. Corporation, a lot of corporations are kind of just like sucking the value out of society. So I think digital currencies are going to kind of expose all of that in a way. Yeah, I don't think it was intentional. Everybody just tries to make more money for their shareholders, but that way of thinking is pretty greedy. And there's a freedom that comes with cryptocurrencies. You'll hear a lot of people say that about Bitcoin, but I think it comes through the whole space, at least for a while. And I think that's why all crypto, I mean, most cryptos are going up. Like if you look at the charts, like all of them have gone up. The top 100, doesn't mean that a lot of them have all that much value yet. It's just a glitch in the system. So the only way to judge that glitch in the system and where these prices are going to go is Fibonacci and Elliott wave. So this is another thing that'll kind of keep you in trouble too. Uh, Cultural influence and peer pressure, like keeping up with the Joneses. So the more money you have, the more money you make. If you have $100,000 a year job, you're going to live in a bigger house. You're going to have a nicer car. You're going to be in the same amount of debt as the person that's making $40,000. So who's really broke, or are they both pretty much the same? Um, it's not about how much money you make; it's how much you keep. That's your wealth. It's how much you keep. And I like nice things. Like I like nice cars. I like a nice house. Um, but I don't do it for to show off. So and then when it comes to money, like losing wealth over time, uh, humans instinctually need validation from their peers, just to get just try to learn how to get more from that from yourself. So just having confidence in yourself and not really listening to your peers. So like veering off of that brainwashing and collective way of thinking will eventually um, will eventually produce more of that validation for yourself. Like everybody needs it to a certain degree, but a lot of people, you'll see people like on Facebook that want to get all these likes all the time, and that's fine. There's nothing really against that. But if you want to be successful over time and have wealth over time, just try to get value, more value from yourself and the things that you're doing, and believe in the things that you're doing. I'm also smart enough to know that there are people out there way smarter than me that I can learn from. I try to think of myself as knowing very little, and I try to learn from other people. So um, I think that there's value in pretty much anything in this world to a certain degree, and I try to take what I want and leave the rest. I'll listen to somebody, even if I think somebody's crazy. Like I'll listen to them and see what kind of value they're producing or what they're talking about, and then I'll take what I want and leave the rest. I don't discount or reject anything. So that's kind of a quote that I live by. I'm smart enough to know that I don't know everything. So you can think of this at how I talked about like things provide value in some way, sports, politics, religion. So every separate sport or religion, they all provide value for those people within that. That value is either validation or whatever all of the different things are. It doesn't really matter what it is, but those people believe it because it provides some kind of value for them. So I've studied a lot of different religions, and I've kind of taken a little bit from all of them uh, to where I feel comfortable and kind of went on my own journey to do that. But politics, I don't really like listening to politics very much. I will keep up with some of the stuff, and then it just doesn't really serve me much of a purpose. I'd rather be learning and educating myself on technologies or how to make money, and so that stuff never really affects me all that much. So how do I figure out cryptos will succeed? I kind of already told you that I think that corporations are the way corporations are built today. Uh, I did go to college. I do have a degree, and I learned something in business school that was maximizing shareholder wealth, and I always realized that that was kind of a problem for the longevity of a company because if they're trying to do that, they're going to pay their employees less, and they're going to try to pump the stock up more, and eventually employees don't have any energy because for the company because they're just being used and they don't really care about the company, and um, that way just doesn't provide much innovation in my opinion. I think if you can pay people a good salary and keep their energies high, they're going to solve problems for you instead of just wanting to show up to work and get a paycheck and go home. And I think cryptos are just that glitch in the system. I think it's going to be a future of more decentralized companies that don't have a centralized authority, and it's going to be more on people that have created a lot of wealth and they actually want to do these things because they really like to do it. Now, I could be wrong about that, but I think that that is the direction that we're moving. I mean, you can look at all the censorship and everything like that too, and I mean, I don't need censorship. I can choose what I want to listen to and what I don't. Um, okay, so that's kind of just the mindset that I use here. I know I kind of went off on a little bit of more of like psychology and um, certain ways of thinking, but I think I just sat down and wrote this stuff down, just whatever came to my uh, thoughts. I wrote them down and shared what's really helped me. Uh, Here's something that's kind of important too. This is the a quote that you hear in quite a lot if you start to kind of learn about psychology and being successful and starting your own business or investing in cryptocurrencies or just something that's completely counterintuitive than that linear thinking. First they ignore you, then they laugh at you, then they fight you, and then they buy Bitcoin, or then they love you. Whatever you hear, um, and that's what people are doing. So that happens. That's just how the human brain works. First they ignore you, then they laugh at you, then they fight you. So if they're laughing at you, you're in the second phase. If they fight you, then you're in the third phase. So you're moving forward. So you're succeeding if that is what's happening. So, all right, that's all I've got. I know it's a little different today. Hopefully, you find some kind of value in there. I'm not going to do these very often. Uh, I just kind of got a little excited to do it. So, hopefully, that was helpful. And if you have any questions on it, let me know. And I'll chart some Bitcoin probably tomorrow. I think we're still in this pennant. Let's see. Yeah, we're still in this pennant, so things are kind of boring right now. Once that breaks to the north and we close above, we should go higher. Um, and hopefully we avoid that death cross, but I'll get to that once it comes to it. So, all right, I will talk to y'all next time.